Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data. So essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite important historical structured zone for this market. In fact, from here, multiple rejections to the downside have been created, actually quite key rejections and very strong rejections. In fact, we can see from here, all this previous move to the downside was created, which lasted several months. Again, from here, we had all this move to the downside created. Again here, and now we just had the break above all this previous resistance that, as we know, since it was previous resistance and now it has been broken to the upside, it is now turned support, because previous resistance in the market, once it gets broken to the upside, becomes support. And at the moment, the market is testing this previous monthly resistance turn support, so there is the possibility to see a potential rejection to the upside away from this level. We can also notice at the same time that from a pattern standpoint, we have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% Fibonacci retracements lining up exactly with this previous monthly resistance turn support, creating a confluence of support inside of this area that we could in fact expect this market to want to reject to the upside. So the monthly time frame as well seems quite bullish, because we have confluence of support inside of this area, because we have the Fibonacci levels with the horizontal previous resistance turn support. And when you have a confluence of support area, you have increased probabilities of getting institutional longing inside of the zone. And institutional longing is something that we will be speaking about later on when we move to the order flow. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, what we can notice is that we do have support at this level. From here, we can see how all this previous rejection to the downside has been created, then the market broke above that zone. And as I explained earlier, and as you probably already know, previous resistance, once it is broken to the upside, is turned support, and the market tends to respect it as support. And we can see, in fact, how here the market respected this previous resistance turned support and rejected it to the upside. Again here, and we can see how, as the market is testing the level and rejecting it to the upside, more bullish price action could be created away from this level. At that point, also potentially creating this double bottom here from a weekly standpoint for gold. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, what we can notice is that, first of all, the market had created this M pattern. And in fact, when the market was here, I explained all the reasons for which we could expect this rejection to the upside. Then the market was testing this previous daily support turn resistance here when it created this red candle and started rejecting to the downside. However, now we had the break above the zone. So this previous resistance is now once again turned support. And by the way, I will link this previous analysis in the description so you can go and check it out for more free education. Now, if the market will successfully manage to break and close above the zone with a strong impulse to the upside, at that point, this previous resistance would be turned support here. So if we get this break above the resistance on the retest of the previous resistance turn support, this is a quite interesting zone, because inside of here, we could see more institutional longing, which at that point could further increase the probabilities of a potential push higher away from that zone. In fact, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for gold, what we can see is that with the last reports, we have seen an increase of the net positions going from 131.1k to 140.2k, therefore showing an increase of the net positions and institutions moving back to the bullish side for gold. At the moment, we have 211k longs compared to only 70.7k shorts from an institutional perspective on gold, so clearly institutions are positioned to the bullish side for gold. And this means that if we get this confirmed break to the upside on the retest of the previous resistance turn support, there is good probability of getting more institutional longing, which at that point would further increase the probabilities of getting more bullish continuation away from this level. So if we get this impulse and correction, what I would expect in a situation like this. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, these are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised if we get a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.